Hi, I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgren, founding CEO at Lundgren's Capital.
Welcome to Sound Economies with Mel and Peter, an East Meets West podcast by Lundgren's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. Hi, Peter. How are you doing today, and how's the week been so far for you?
Hi, Mel. Yep, it's good. Exciting times for sure, and also busy times. And a
Mm-hmm.
lot of things going on. We had sort of also the first visit from an American asset manager this week here in Copenhagen. Sort of the
Oh.
first visit out after Trump has won the election. So that was, of course, very interesting, and naturally, the U.S. outlook and the Trump government and policy
Mm-hmm.
was sort of the center of the conversation. So very interesting, yes. And what about you?
Well, it's been also an eventful week. I think we're still dealing with very big news from last week, like a lot to monitor. We have China, we have the US, as you mentioned, and of course, some domestic news that we're monitoring as well, both political wise and economy wise. So yeah, been it's been an entertaining week so far. And yeah, and we have a lot more to discuss today, Peter, in this
Oh, yeah.
episode. Right. So today we have on the table Germany's political transition, Thailand, a bit sunny news from Thailand. They're adding more holidays for 2025.
Wow.
And we're also, of course, gonna discuss very timely topics regarding the way forward for the China and US markets.
Mm,
It's quite interrelated, so we'll have to go through that a bit up apart and then together. And of
mm,
course, as usual, we will break down our global outlook and our house view regarding the markets that we cover. So
yeah.
let's get it rolling. Peter, what's something interesting you've spotted recently?
Oh, yeah. A lot. Yeah. But as you mentioned, maybe as a Germany, we are coming big across the big economies today, actually.
Yes.
Uh, so just very briefly on Germany, it's confirming our view. What they have managed now, or what the German chancellor has managed, is to move forward the confidence vote from mid January to mid December. As from outsiders, this is not to understand, and then they can have the election in mid February. It is a very unflexible bureaucratic system and way of working, and it sort of underlines Germany's problem fundamentally. As we had not expected any growth signs from Germany in the whole 2025, and
Mhm.
this is sort of confirming because Germany is on hold after the election in mid-February. There'll be probably a long period yeah on finding a new government, building a new government, and that is a sort of a standstill period. So this just confirms zero sort of zero growth in Germany for until 2000 end of 2025 is confirmed, I would say. Uh,
Yeah.
it's not the most fantastic to talk about, yeah. And again, we can once more say, okay, we are happy. We recommend since many years to underweight Europe, and that just
Mhm.
is good. So, what about your sunshine in Thailand? Tell us something good.
Right. So a little bit more cheerful news from ASEAN. So Thailand is adding two more holidays for 2025. So they're coming up with two 4-day weekends, one in June and August next year. So
Mm,
they're trying this strategy where they want to encourage domestic tourism. Tourism has been a key cog in Thailand's economy.
mm,
It's contributing about 12% of GDP, at least in its at its height pre-pandemic. But all that declined since borders were closed due to the COVID-19 pandemic. But now they're trying to revive that. They've actually also relaxed some of their visa requirements for foreign travelers, and then they want local tourists, local residents to come travel around the country too. So I think
Yeah.
they're getting 21 state holidays next year. So maybe that's something that we envy, but I don't know. I'm not sure how exactly additional days off could support tourism, but
Uh,
it has to make sure that people have the purchasing power or the disposable income to actually make
yeah.
something out of these holidays.
Yeah, yeah, that's a fantastic strategy. They must have seen something else than none of us have seen. That adding the number of holidays will increase the economic growth. Normally,
Right.
it's sort of the other way around, that governments are reducing the holidays so people can work more. Yeah. Okay, they trust very much in the domestic sort of tourism, and that should
Mhm.
make it up and actually increase GDP growth. Here in the office, we would probably say that people, they need to earn the money
Take
before
a
they can spend it,
vacation. Yeah,
or
right.
they take up a credit. Yeah. But anyway, interesting. I saw that the Thai government is looking into allow casinos again. Yeah, gambling.
Mm-hmm.
So yes, they go all in on tourism. Also the domestic. It's interesting. Maybe we are a bit doubtful. We are actually a bit concerned. That's another story.
Mm-hmm.
Yeah,
Correct.
but sunshine, and that's nice.
I think a lot of it also is so tourism has declined and also Thai manufacturing is down, largely attributed to the global demand slowdown, mainly because of China. And now
Yeah,
that actually skipping to another topic or quite related still, like the Chinese economy is expected to to lose some steam or negatively be affected by the additional tariffs from the US government. And
yeah,
Thailand could be benefiting from that, like as well as Vietnam. But
yeah. You're
now
right.
that maybe when the situation is still fluid and uncertain, maybe they want to count more on tourism than while waiting for that effect to kick
Mm-hmm.
in.
That's
Yeah.
true.
Heading over to China actually. So China and the US, there have been a lot of developments over the past week.
Mm-hmm.
And yeah, China is navigating a post US elections scenario while it's also trying to clean up its own domestic story. So a
Mm-hmm.
lot of action there too. Oh, what do we think about recent news about the incentives, for example, the stimulus packages that are coming off from the week-long People's Congress meeting?
Yeah, it's the thing we've been talk so much about
Yeah, couple
past
of weeks already.
podcast, and yeah, are we sort of where we say, okay, this is a bit in line with expectations. The package that then finally were released with numbers on last Saturday, yeah, during the weekend.
Right.
And it's again, it's aimed very much against the real estate market and also towards the provinces as a basically again another step to get the balance sheets of in the provinces cleaned up, basically. As a more of the debt is more visible in the future, so to
Mhm.
say. So we know what the debt levels in the provinces are, and we should remember Chinese provinces. They're big economies, yeah. So it's sort of
Yeah.
huge steps and a big work to get these provinces a bit back on track, so to say. Yeah, it's a big condition for getting China further on good tracks ahead. It's not the sort of what is not so fancy for the investors in the stock market. Yeah,
Mm-hmm.
and okay, some had hoped that there would be a bit more focus on supporting households and consumers. Yeah,
Correct. Yes.
and that's where we had said, okay, we don't trust it will be now.
Mm-hmm.
And that's also the case. Probably it can be. What do we think, Emil? Is China holding a bit back so have some dry powder to counter U.S. tariffs if
Right.
they
So
come?
we actually saw that they adjusted their Congress meeting just to have time to wait and see what the election results will be, and it was perfectly timed. Like the
Mm,
world already knew by midweek of last week who the US's next president will be, and
mm,
also they also saw the Fed decision already. So a lot of the question marks that they were supposed to discuss were received quick answers by the time that they came out with their decisions and released their statements. But yeah,
mm,
it's looking like a lot of the response, the countermeasures that they're doing, it has really become government led, and we
mm,
expected that from a bureaucracy like China, but it's looking like it's not as strong as it could be in terms of
mm.
shaping how fast and the magnitude of the the preparation maybe against the next wave of tariffs, because this next one is looking like it's gonna be bigger than the first Trump presidency, right? It's a 10 to 20% tax on all imports. It's 60% for Chinese goods, and I'm not sure if 60% is actually doable, but because a lot of manufacturing relies really on China, but
Yeah.
it's really gonna hurt the Chinese economy, especially if it's not almost back on its feet by the time. And that's very soon, right? January is very soon for Trump to come back into
Yeah.
power.
Yeah.
And maybe right now they're bracing for impact, but it's not gonna be as swift in terms of rolling out, how would you call it, defenses against the tariffs that are about to come. Yeah.
Yeah. There are a lot of question marks. Of course, we have supported the view since long that to move the domestic Chinese economy forward, it would be great to support the household purchasing power. But we're also realistic and say it might not be in the cards among the sort of as the first choice in the Chinese leadership. And now they'll probably need to wait and see a bit. As we've seen this week, that it is the very old style and class Chinese hawks, the most hawkiest of the hawks when it comes to China that Trump has put in place. Yeah, it's a very strong team in terms of their belief in um, tariffs and
Right.
sort of trade barriers against China. We've seen a bit as a reaction in the stock market this week,
Mm-hmm.
um, both on maybe some who were a bit disappointed after the numbers were released on the package during the weekend, as mentioned, and
Correct.
then also then we've seen the good old hawks from from the prior Trump era also were reinstalled again to fight the trade war against China. And what could come up? How could China counter? Of course, they could try to meet the US on some of their demands.
Uh-huh.
Uh,
Correct.
and that is one option, yeah, of course. And what we sort of playing around with here in thinking wise is that the Chinese government have kept some money to support
Mm-hmm.
Chinese exporters, and that can be too simply to lower tax or tariffs, as Chinese tariffs or whatever, yeah, as to support the Chinese exporters, so they can keep themselves competitive on the price.
Competitive, yes.
So this is what we here at Long Greens believe they have uh, kept money, sort of hold some money back, so to say, in fiscal terms, China,
Mm-hmm.
so they can counteract on what will come from Washington D.C. So the stock market, Chinese stocks has reacted negative this week. It would be hard to believe anything else there. Why should they go up on these news? On the other
Correct.
hand, they have lost ground, but it is not a deep dive. It's not a panic. Yeah. So far, we've seen okay. Uh,
Yes.
we can see investors going out of the market saying, okay, this look too tough for China. Yeah. But the latest gains that the Chinese stocks have had are still very much on the books and well kept. So we are okay with China still. We know there will be some stormy months ahead at some time, but the Chinese stocks as such is still priced very low, and of course support the stock market, so to say. And then the big issue, Mel.
Yes. So actually, a lot of the discussions today are, I think we could say that the concern between China and the US, even though they're at loggerheads, is of course they need to perk up domestic demand and household income more, just so you can generate more growth. But that is always the issue as well. So in China, that's where they're trying to raise funds that they can use to perk up the economy right now. And in the US, um, the concern also is the middle income squeeze and how Trump could support these households. So of course, what he's been saying, and we've discussed this extensively as well in past episodes, is that he wants to cut individual and corporate taxes, and then he is gonna plug that revenue gap with the tariffs that he plans to impose. But is this really a direct way to help these households recover their spending power? That has always been the issue, right? More than the inflation figure, that's where the voters feel it the most, right?
Yeah, yeah. So this is interesting, and of course we need to spend a few minutes
Uh-huh.
on on US and sort of the outlook and all the ideas that are sort of emerging
Mm-hmm.
from the Trump camp. And this should be said, it's not as we are trying to look into what suggestions, what proposals are coming up. It's not so much against or pro being pro Trump.
Uh-huh.
It's not the sort of the president or Republicans as such we are discussing. This is
Yes.
much more, and it is much more sort of the discussion. What can a president do now for US? Yeah, and that is actually pretty interesting.
Mm-hmm.
And of course, whoever has won, Kamala Harris or Trump, they will have taken over as of today the same economy. As a That's it. That would be sort of here are the books, and here's what you have, President. No doubt that Kamala Harris probably would have chosen a policy that would have been sort of business as usual, as we talked about before the election. And obviously, Trump will try to twist the U.S. economy in many ways, and this
Mm-hmm.
is also what he promised the voters. And to cut it short, the voters have asked him to take the Oval Office to fix their biggest problem, and that is that there's not enough money in the pocket. And
Mm-hmm.
many surveys, as a lot of polls, whatever, during the past months have shown that people they point at the high inflation period. That's been a problem. It's taken away the purchasing power. It's hard. Its cost of living is high,
Yes.
um, and this needs to be fixed. And that's why they have put Trump in the office. Sounds like a quick fix, and it might not be
Got
that easy. Yeah. So that's the key. As a, to be frank, how much does it mean for household that the price of eggs has gone up with 50%? Not a lot, honestly. The big difference, if we look back to the period 2017 to 2020, basically as
First
Trump
term, yeah.
stepped down as president in January 2021, yeah, interest rates at that time were much lower. When Trump took over the office in 2017, the 10-year Treasury was trading at 2.5%. And today is like, let's say, 4.4, 4.5, yeah. And it actually went down to 0.5% during his time in the office in
Mm-hmm.
2020. So taking up debt at that time, refinancing the famous credit card debt that a lot of US citizens have, or
Mm-hmm.
to get the car financed is simply more expensive today. And the same for as a very short end of the interest rate. Also at that time, when Trump took over, it was a 0.5% actually in
Mm-hmm.
2017, and today it's 4.5 or 4.4. So that's a big difference. Of course, the car has gone up in price. That's inflation. But
Yes.
to finance a car is much more expensive, and also to finance your house is much more expensive. So that is part of the story. That is a big difference as when we're talking about getting inflation lower, but inflation is down to 2.6. There's no worry. There's people should be happy.
On paper, yeah, they're already almost there on the
Yeah.
target, right?
Yes, exactly. The challenge is somewhat more big, yeah, as it's bigger than just hey, get inflation under control. It is under control. That is mainly due to a big and fine work from the U.S. Central Bank actually, and they've done a very good job. Um, so Trump's idea about building walls around the U.S. economy using tariffs as the wall, how much will that mean? It actually means that and also his dream scenario would be that the manufacturing would go back to
To
US
the US, yeah.
because it's too so to outsource is it doesn't work anymore because the tariffs are so high that also US manufacturers need to move their factories back from Mexico and put it on the US side of the border. In the end of the day, would it mean that the products are simply getting more expensive for the US households? That is as easy as it is.
Mm-hmm.
So that is a squeeze. And sort of in other directions, if we look there, um, yeah, if he wants to as a from the political part of the world to provoke that U.S. rates are sort of dropping, then it's most about lowering the U.S. government deficit. And that
Yeah, it's
again
always been the
means
concern.
a squeeze for the households. Yeah, we don't think it's so easy, to be honest. For as
Correct.
Trump would try to explain it. Um, so that is one outlook. So we continue to see a squeezed middle class in US, and that is very much in line with our one of our long-term trends, as we look what we call mega trends. That's the middle class incomes in the Western world. They will continue to be squeezed, and the lower middle class incomes in the emerging market countries, they will continue to move further up to sort of the middle class income level, and sort of the standard of living will equalize even more between emerging
Mhm.
markets and the old economies.
Right.
And if Trump he won, he would like to counter that. The best way for also U.S. households to explore better living standards, that is to be saved by higher global growth. That is the way to make the cookie bigger. Everybody are happier. Uh, uh, and that is the way, but that means we need to have open trade, no tariffs, open global economies. Everybody are happy and doing all the business they can. So it is a completely different way to go.
It's the
There's
quite the reverse.
yeah. So that is that is how we would what we would advise here. There's one interesting sort of initiative that's good. And that is the new idea about a department for government efficiency in the US.
Yeah,
Yeah.
featuring
Now,
Elon Musk.
yeah, and then run by Elon Musk. But the key is as a to create less regulation and more dynamic. That is how that can help one economy forward. Also
Hmm.
that is sort of this uh, making it domestic stronger, so to say. And it would be a clear winner towards the very, very static Europe. Yeah. So kind of initiatives are interesting to see if they can get this to work. Again, US is a very federal society, meaning that the states have big autonomy. Yeah. So
Mm-hmm.
on a federal
Right.
level, it can be hard to force changes through. But these kind of initiatives are at least interesting to follow. How it goes, we don't know. But all in all, so we're a bit skeptical actually on solving the world with trade barriers. It has never worked, so to say. If you go over several hundred years back in economic history, it never worked. So why should it work now? And it's what we say. And it leads to a second worry. Let's be honest. And this is what we talked about before the US election. The
Right.
worst outcome we could see was actually that one of the president's candidates would win the total control, meaning the Oval Office as having the presidency, and also having the control of the Senate and the House, the whole Capitol Hill, because whoever would have won, we argued at that time, at one day after a couple of years, they will probably take and say, okay, I use this very strong political position and then
Mm-hmm.
simply increase the government debt and try to solve the problem that way around for the US households and saying, okay, we simply spend more money, public money, and then lift the GDP that way around. And this is actually sort of the end of the conclusion and long talk. This is what we believe will going to happen in a couple of years.
Right.
And we don't like that. That is really a concern. And that's another story. We will come back to that probably many times, but this is how we
Yeah.
see
But
from here.
in terms of how it changes our long-term view, Peter, we've dabbled into that the previous episode, and now that
Mhm.
we're coming into the global outlook for so given what we've seen so far,
Yeah.
how do we take in these developments? We're
Yeah,
still happy?
you.
Are we still
Yeah.
more
Mel,
worried?
Mel, you tell me. Now I had a long talk. Now you tell me. Are we what do we think in Asia? Come.
Well, here in Asia, we're seeing of course, some cautiousness now that the election cheer, so to speak, towards the US has dissipated somewhat. And of course, the tariffs are a source of worry globally. We are
Yeah.
not too thrilled about that coming to life very soon. Should Trump implement it right away. And we're seeing some cloudy skies, but it's not something that would change our long-term view just yet.
Mm. Yeah. Exactly. So yeah, the we're still happy. We're still happy for risk, but where we have changed our view, as you say, is a bit on the long term in the fixed income market.
Mhm.
The view is now that we will see a steepening of the yield curve, as you say. So meaning that the central banks can continue to lower the interest rates, both in US and Europe, meaning the short end will be lower, yes, and where we have argued before the US election, that would mean sort of a parallel shift in the whole yield curve, meaning if they were
Yes.
cutting in the short end, the low end would also follow lower, and that will be good for for investors with holding bonds with long duration. We now say the yield curve with more tendency to have a steeper sort of look, meaning when the rates are cut in the short end,
Mhm.
it doesn't affect a lot in the long end.
Yes.
So it means the juice is a bit out of the trade of having very long duration. So we prefer now to be a bit in the middle, sort of have middle duration focus and target. And you could say it's maybe a bit too closer to neutral duration,
Uh-huh.
depending on how you run your bond portfolio. So that is the shift we've taken. Um, Otherwise, we remain overweight equity, we remain overweight US and Asia, underweight Europe. All these things
Yes.
are the same still, but as you mentioned, there are a few clouds on a sunny sky, yeah. And these clouds could occur at some time, maybe not this year, but we are aware of, even for the stock markets, a few bits and pieces are adding up to some sort of concern, but at a low level still. Yeah. So a change, yes, in our view, but yeah, not
We
extreme.
have a lot. We have a lot to monitor, clearly, but
Wow, yeah.
optimism still prevails so far, at least.
Yes.
So that's all we have for today. Thank you, everyone, for listening in, and thank you, Peter, for your insights.
Yeah, it's my pleasure. See you.
We'll be monitoring global developments and we'll share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Longines Investor Insights. Thanks for tuning in. For expert insights on the go, download the Longines Investor Insights app for free. For investors, we offer very exciting and high quality alternative investment funds, including our top rated Mutual China Fund. To know more, visit longinescapital.com.